Absolutely, Scott. The story of the day here and in the markets is this head-to-head really between President Trump and Fed Chair Jay Powell, starting with that Truth Social post early this morning. But the latest headlines just crossing from the Wall Street Journal saying that President Trump has for months been privately discussing firing the Fed chair. But the Journal reports that the Fed has not made a final decision about whether to try and actually remove him. The Journal also says that the president down at Mar-a-Lago has been speaking to the former Fed Governor Kevin Warsh about the possibility of potentially firing Powell before the end of his term next May and asking Warsh to be the one to succeed him. That all crossing from the Journal just a couple of minutes after the president wrapped up in the Oval Office alongside the Italian Prime Minister, I should say, Meloni, where Powell again was, I would say, the biggest topic of conversation. Take a listen here to just some of the comments the president was making there about Powell.
On Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave it even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. But
do you believe
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me.
If you listen closely there, the president saying that he clearly believes he would have the legal authority to remove Powell if he would be gone if he asked him to, but not answering questions directly about whether he's actually taking that step now. But that was just some of the comments about Powell. The president went on to praise the European Central Bank for cutting rates, but said, quote, "Our guy wants to play cute," saying that Powell was playing politics, that the Federal Reserve in general was playing politics, and he called the Fed political, saying there will be a lot of political pressure on the Federal Reserve to cut rates and that Powell owes it to the American people to move things in that direction. This careful dance, of course, about, treading this line about whether to fire the Fed chairman coming after a White House official told me earlier today not to take that Truth Social post as a threat to actually fire him. So clearly they're still deciding there exactly how they want to proceed. Just one other topic, Scott, to bring you because it still continues to be a major story, is the status of ongoing trade negotiations. The White House says that they're negotiating with some 75 plus nations. In the Oval Office, the Treasury Secretary Scott Bessent listed Japan, the European Union, South Korea, and India, all as nations that had either been to Washington for talks or were on their way here, in the case of South Korea coming next week, saying that all of those were moving very quickly, hinting at potentially some deals to come. The Italian Prime Minister Meloni also made comments about Italy having to increase their LNG imports and potentially buying more nuclear from the U.S. as well. I flag that just because it gives us a little bit of a hint as to how these trade talks are going. Countries are looking for ways to buy more from the U.S., reduce that trade deficit to potentially win a deal from this White House. Scott.
Megan, the other thing is, back to the Powell versus the president story, which, as you said, has been the talker all day long. Maybe the most important development from all of the day's reporting is the fact that the Treasury Secretary, according to multiple reports, has apparently told the president it would be a bad idea and has pushed back against it actually happening.
Yes. Yeah. Clearly being the one inside this administration to make that case of needing the stabilization, especially given everything else that's going on right now with markets on edge. Firing or even attempting or moving closer to fire a Fed chair would be destabilizing to the markets at any time, as you know. But given how much else this White House and this administration is doing that the markets are already on edge about, that's been part of Bessent's argument about needing to keep things in check here. You never know with this president who he's listening to at any given time, and if he feels that at a certain point it's time to fire Powell, no one official will be able to stop him. But it is important to know that there's someone making that sort of case for moderation inside the administration.
Yeah, and the question is, what would the markets receive if he actually tried to do that? I'm sure, as you know, the Fed chair on multiple occasions, because this is not really the first time that President Trump has mused about this, Powell's pushed back on every occasion, and he's literally been asked on every occasion about this new political dynamic between the two, and if he would even entertain the idea of leaving if asked, to which he's been emphatic, suggesting not a chance.
Not a chance, which I thought it was so interesting the reason the president answered today, oh, if I asked him to leave, he would go. The president clearly being told by somebody that he has the legal authority to do that, which is very much in question right now. But Scott, I also think it's important to pay attention to some of these other things the White House is doing behind the scenes. The firing of the 2 Democratic officials at the Federal Trade Commission happened maybe a month ago now, but raises a big question as to whether the president has the authority to do so. There's a lot of questions about whether challenging that decision, whether that ultimately goes to the Supreme Court. That's the same legal precedent that protects Powell and protects all of the Fed governors in their jobs as well. I asked a White House official today about that case in particular, whether that's something that should be seen as linked to Powell's, the safety of Powell's job. I was told, for what it's worth, that they're seen as in separate silos inside the White House. But anyone you talk to outside the White House believes that could very much be a precursor to what might come next for the Federal Reserve.
All right, Megan, thanks so much for the good reporting. It's Megan Casella at the White House for us, as always. Our CNBC senior economics reporter Steve Leisman joins us now to react to these latest headlines. We discussed a couple of hours ago this whole notion of the president musing about this. Now you have the advancement, if you will, from the Journal today saying that he's privately, the president has, discussed firing the Fed chair and has spoken with Kevin Warsh about succeeding Chair Powell. What do you make of all this?
I want to offer you 2 bits of what's potentially good news out of this, Scott. The first is that we seem to be learning, Scott, there are people around the president who are dissuading him from this idea. And among that, the second reason, the most important, is Kevin Warsh. Kevin may have different ideas for how Federal Reserve policy can go, but he's also a man, I think, that venerated the institution itself. And so I'm trying to think of a guy like Kevin, who served at the Federal Reserve Board of Governors, actually taking the position after Powell was ousted. He might do it, but my strong guess is that would not be his preference, and that would not be the way he would want to go about this. So I think the idea that he's pushing back against it, others seem to be as well, is probably good news for the market. But whether or not that makes any difference at all in the mind of the president, who feels he has the right to do things that other presidents in the past have not felt they had in a whole range of things, that's unclear. And it's, I think, a constant and present risk for the market, with the proviso that I said there seems to be people around him. We understand from a story earlier today, Scott Bessent among them, dissuading the president from a disruptive move like this.
About the Warsh angle, for those who may not know him as well as you, me, and our regular viewers may, what does he bring to the table? I mean, he's absolutely been at times unafraid to be a critic of current Fed policy over the last 2-3 years. And he's also been public in suggesting that the Fed's strategy of their forward guidance is wrong. So he's different than the current Fed chair in many parts of his thinking around monetary policy.
I think that's right. I mean, a little of the background of Kevin, he was on the Fed during the great financial crisis, was one of the people who brought a certain market expertise to the decision-making then. He supported it, I guess, publicly while it was happening. After he left, he said he had strong disagreements with some of the decisions of the Federal Reserve. He seems to be coming from different sides at times. But one of the potential ironies here, Scott, is that Kevin is not a loose money guy by any stretch of the imagination. Among the things that we've been talking about that has been something that Kevin put forward not too long ago in a Wall Street Journal op-ed, which has interestingly been embraced very much by the Fed chairman, is this idea that the Fed has responsibility for whatever happens with the tariff inflation after the initial price increase. He says, look, that's the Fed's responsibility to make sure and to set policy in a way that does not create second-order effects of tariffs. What does that mean? It means doing almost precisely what Powell is doing now, which is what he said twice now on the 4th and yesterday, that it's the Fed's obligation to make sure this doesn't happen. And in the first instance, almost before addressing economic contraction or economic weakness. So if the Fed, if Trump wants a guy at the Fed who's ready to start to cut rates just off the bat and also to provide quantitative easing or whatever to the market. Kevin is not on the surface your guy. But I will say one other thing about Kevin. I think Kevin would be willing to incorporate some of the other aspects of the Trump administration's policy into his thinking. I would suggest that perhaps he would take more a signal from the possibilities of deregulation than Fed Chair Powell looks willing to do at this point.
But the notion that Warsh is just going to be a yes, sir, I'll cut interest rates kind of guy when he's leaned on, I think is absolutely mistaken. My point being, what I know of him, and I feel like I know him a little bit, he's not like that. He's an independent thinker. And he's not afraid to push back against strong personality when he feels like his point needs to be heard or he thinks you should do something else. I'm not suggesting that he's ever done that in his current role. But by the way, he works now for Stanley Druckenmiller's family office, OK? Not exactly a meek individual who is just going to sit there and tell Kevin what to do. And Kevin's just going to say, yes, OK, I'll do that.
I think that's 100% right. And it becomes interesting to think of a person who might take office with the background of the president having ousted the prior chair. Is now the tradition in America such that the Fed chair is and will be subject to the whims of the president, which means that if Kevin doesn't come through with the policies the president wants, well, he'll be fired too. And he would not be the first person the president put in a position and decided to then get rid of him because he wasn't doing what the president wanted. So it's a very dangerous and slippery slope. I think your characterization of Kevin is right. I think of the idea when this group called the Shadow Open Market Committee, a group of people who generally are critics of Federal Reserve policy, when they want a keynote speaker, well, Kevin's high on the list and often the one called.
Yeah, for good reason, too. Steve, thank you for shedding some light on this. We'll follow it, obviously, and it seems like this story is going to have some legs for a little bit. So we'll see what any developments are between now and who knows, the end of the day. And in subsequent days to come as well. Joining us now on All Things Markets is Schwab's head of investment strategy, Liz Ann Saunders. It's good to have you with us. I guess you didn't realize you'd be leading talking about the Fed, but here we are. And this squabble, if you will, between Powell and the president. That's how I'm characterizing this whole thing. I mean, what would it mean, do you think, for the market if the president tried to fire the Fed chair? Forget about whether Mr. Powell decided to leave or not. Just the mere fact that he would be fired.
You know, Scott, I'm often asked what are some of the big risks that maybe fewer people are talking about that you think would cause trouble for the market via confidence crisis or otherwise. And my answer has always been any serious threat to the independence of the Fed. Now we're potentially facing that head on. I think it would be unquestionably a negative in a backdrop where we already have a lot of uncertainty. You know, it was interesting to listen to Steve. I've known Kevin for more than 20 years, and I agree with everything that Steve said. I think he is an independent thinker. He believes in the independence of the Fed. And it's interesting that not only has there been reporting that Treasury Secretary Bessent has pushed back on the president about potentially trying to fire, and we don't even know whether he could even do that. But there's also some reporting that maybe Kevin Warsh also imparted that message to the president. So maybe we can, find some hope in some of the pushback that's happening, because I think this would undecidedly be a negative for the market.
I mean, it's yet another sort of storm cloud that's kind of hanging over the market, but one that's already been blanketed with fog, including how you and others in your profession are trying to view these markets. You took all your sector recommendations down to neutral recently.
I did.
Speaking to this very point, visibility is terrible.
It's terrible. And the last time we did that was in the early part of the pandemic, which was also the time, like we're seeing now again, where you saw at that point, it was a record high percentage of companies that just withdrew guidance altogether to the analysts covering their stocks. So we're already hearing an increasing number of companies either doing that or doing, like I think it was United Airlines the other day that came out with two scenarios, sort of a base case based on what they were thinking prior to the onset of this trade war as we know it now, and then kind of worst case scenario of a recession. So I think that's going to be the story of second quarter reporting season, is the absence of guidance. That doesn't mean analysts are not going to pepper their companies with questions about how are you navigating this in the near term? Are you holding off on long-term CapEx plans? How do you anticipate you might be able to protect your profit margins? So I think there will be a lot of color that comes out of this, but the precision around guidance won't be there. And what we're seeing is when sort of left to their own devices, and this happened in 2020, analysts, their bias was to lower estimates. So I think the path of least resistance, the direction of travel, is still down for estimates that have already been coming down for now 17 consecutive weeks for calendar year 2025.
Oh, they sure have. Definitely earnings growth expectations have been steadily coming down. So what are you advising and investing on, right? You can't rely really on corporate guidance, but nobody can. Do you just make an assumption that eventually there are going to be big trade deals, that we're going to do some kind of deal eventually with China, and then we'll move on to tax cuts and deregulation, and thus you put a toe into the market? You guys have a tough job, in this environment.
I'm not making any assumptions in this environment. I think that makes absolutely no sense. We see on a day-to-day basis that the headlines can really cause things to swing on a dime, and I wouldn't attempt to get inside the minds of either the administration or some of the trading partners that are coming to the table, in part because there have been, different messages in terms of what the ultimate goal is of tariff policy as it exists right now, and therefore begs a lot of questions about, okay, what could the deals represent? What could those concessions? I don't know that answer to that any better than anybody else, which is why the best thing you can do is look inward and say, all right, am I comfortable with ongoing risk in this portion of the portfolio? And if the answer is no, then there's probably things you can do from an asset allocation perspective, neutralizing our sector recommendations, taking a factor approach, investing in factors based on characteristics that is very high quality, low volatility in nature, to try to navigate sort of within the confines of a very volatile equity market. But it is a really, really tricky time because we're so at the mercy of policy decisions that are just coming rapid fire on a day-to-day basis.
The other issue in trying to hide, there's been no place to hide. I mean,
Right.
Equity market's been going down, the bond market was shaken up, so people were seeing their bond holdings, go down. Gold, I guess, has been working. Currencies haven't been a reliable safe haven play either. I mean, that's muddied the strategy too for the kind of investors who look to Schwab not only for trading activity but for advice.
Well, we have been, not just in the recent weeks, but we have been really trying to reinforce the benefits of diversification globally, not having your eggs all in the U.S. equity market basket. And that had been a big theme around the U.S. exceptionalism. So we do always really push on the idea of diversification across and within asset classes. Scott, you and I have talked many times on this program in the last year or so about being mindful of concentration risk and how individual investors shouldn't have felt this pressure to be so overweighted in a group like the Magnificent Seven, because they're not benchmarked on a quarterly basis to the S&P 500. That's an institutional problem. So it is times like this, though, that I think sometimes makes investors aware if their emotional risk tolerance and their financial risk tolerance have a yawning gap between them. And it's unfortunate that sometimes it's a volatile period that brings that to light. And that's just the best way to help investors navigate through this is actually saying, what is your plan here? What is your financial risk tolerance? What is your long-term strategy? And then, work back into what that makes sense from a asset class perspective.
Appreciate you coming on with us once again. We'll talk to you soon.
Scott.
Lizanne, thank you.
Okay.
All right, Schwab's Lizanne Saunders.